As we talk about that leadership, Aadil, what are you anticipating from the Mag 7, especially as we're looking for this diversification within portfolios right now?
Yeah, so we do think that these companies will continue to do well because what happens is that there's a lot of expenditure that is going into artificial intelligence. There's a lot of government policy that is supporting artificial. There's deregulation also happening. And that makes us believe that because of the productivity that these companies are bringing about, because of AI-related productivity, that's going to cause GDP to increase as well. So we do think that the Mag 7 will continue to do well, but one of the problems we see, we deal with a lot of retail investors. One of the problems we see is that people are like overly concentrated in the Mag 7. You know, like they'll have 60 to 70% of their portfolio in tech-related investments. That's where we want to put the personal finance hat on, and we want to say that this can be treacherous. Make sure you're broad, because to your point, there are a lot of other sectors that are doing really well. AI doesn't mean that only Mag 7 will do well. There are other sectors that could do well also.
Has that rebalancing started to happen among clients yet? Because I feel like April was maybe a wake up, or February to April was a little bit of a wake up call, right? A lot of those stocks got hammered pretty significantly, but then you had the strong come up really over the last month and a half now. Are clients starting to really wonder, like, okay, should I rebalance here? Did I just hold NVIDIA, it did really well, and now it's too big in the portfolio?
Well, this is where the behavioral finance comes in as well, because people don't want to sell NVIDIA, like they love it, right? So, and where others were being aggressive end of last year, we were being defensive. We were saying, all right, take a pause, take a step back, right size your exposure to these companies, increase the breadth of your portfolio. So we have been doing it, but I do feel that the ordinary retail investor that is having a do-it-yourself approach is overexposed there. If you look at the S&P 500 by itself, that's more than 40% in tech right now. And if you add a few other technology companies in the portfolio, now you're 50, 60% in tech, right? Okay. That's the ordinary retail investor that has a do-it-yourself approach.
And so with that in mind, there was a competitive issue that all of these companies, to your point earlier in the year, had to move through, which was, okay, what's the risk of a DeepSeek? Yeah. And investors having to wrap their minds around that. At the same time, knowing that they were going to be investing these Mag 7 businesses, investing heavily, and the capital expenditures were what they were going to be measured on and how quickly they could deliver that return on investment here. I mean, how far out should investors be expecting for some of those massive multi and $100+ billion sums to actually be accretive into the business performance and bottom line?
Yeah, so we do think that it's going to be sooner rather than later. We do think that what a lot of people are underestimating right now is that, just when the internet came about, right? When the internet came about, there was huge productivity increases, right? In the same way with AI, there's going to be huge productivity increases, which is going to translate into GDP growth, in our opinion. So that is why our thesis has always been that this budget deficit issue is a problem, but there's a strong possibility that we can grow out of it as well.
And you had sort of mentioned, I think earlier, utilities as one way to maybe play that AI expansion, right? But I'm curious, other sectors, right? Do you see opportunity? And some folks we have that we talk to, Brad, talk about maybe retail, right? If they're able to use AI, and then they obviously could boost margins through less workforce, et cetera. I mean, how do you think about the spreading of AI and sort of where else that trade goes?
Absolutely, that's a fair point, So retailers, industrials, one of the companies that we like is Eaton, for example. Yeah. And they make the equipment that is used to transmit the electricity. So, and utilities, no one was talking about this. This was one of the most boring sectors ever. It's one of the best performing sectors now, right? So there are ways to play this AI boom by having exposure to other areas, because a lot of businesses are going to benefit. Even in our business, in the wealth management business, we are seeing AI-related benefits, right? So we do think that that's going to help other industries, not just tech.
Appreciate that, Aadil and Josh. Josh, thanks for hopping on the set.